please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Straight to all of the action on Dalal Street then. It was a volatile day of trade where the street saw a flat end on benchmark indices and underperformance by the mid-caps. Nifty managed to hold on to the 10,700 mark. The Sensex ended with a flat to positive bias. Bank Nifty that is closed with a 36-point gain, and the mid-caps tanked post-lunch. That index closed 1.5% in the red. Anuj Singhal, as always, joins us with a wrap of today's trading action. Anuj.
Volatile trade for markets today, and in fact, especially in the mid-caps where there was a brutal correction. In fact, HDFC Twins and some other high-quality names sort of stood up for the bulls today. Metals were down, so Vedanta, Tata Steel, Hindalco all going down. In the banking pack, you had SBI, ICICI and Yes Bank, which were correcting. But as I said, HDFC Twins, Kotak, Reliance, ITC, Axis Bank, some of these stocks really managed to counter the weakness in some of the other big ones. Auto stocks were down after the sales number, which is interesting because they reacted negatively to good numbers. So Hero Motor, Tata Motors, Eicher Motors were all down. In the F&O space, big losers, PC Jewelers, Repco, Century Textile, Just Dial, Jet Airways, Adani Enterprises, SAIL, Balrampur Chini, Marico after missing the numbers. And of course, there were some gainers as well like Equitas, Ujjivan and Amara Raja. I think there has been a bit of a message from the market today to perhaps get out of leverage a bit and avoid some of the high beta mid caps for now.
All right, Anuj, a very volatile day of trading on Dalal Street today, but online hackers have stolen confidential data of formal sector employees who have enrolled themselves with the Employee Provident Fund Organization, or what you call the EPFO. The commissioner at EPFO, that is VP Roy, has written a secret letter to the CEO of the Common Service Centre at the Ministry of Electronics and Information Technology, and the subject line of the letter reads, and I quote, "Data theft from ICT infrastructure of Aadhaar seeding services for Employees Provident Fund Organisation," end of quote. Yash Jain is standing by with more details on the contents of this letter and how the EPFO is responding to it. Yash, you spoke to Mr. Roy. What did he tell you?
Well, Ritu, first things first, when I spoke to Mr. VP Joy, he did not deny the existence of this letter which is being spoken about. In fact, he went ahead and said that this potential data breach did not happen on the end of EPFO, but it may have happened on the end of Common Service Centre. In fact, this is something which is pointing out in his letter as well. And let me quote him here. He says that the application running on the server, which is EPFO server, but is being remotely managed by Common Service Centre team, which comes under the Ministry of Information and Technology. The letter makes it explicitly clear that the data was stolen, and it's a good time to quote Mr. VP Joy out of that letter again here. He says that the data has been stolen by hackers by exploiting the vulnerabilities prevailing in the website, which is aadhaar.epfoservices.com. Now, after this, in this particular letter, Mr. Joy also write to the Common Service Centre asking them to deploy an expert technical team to plug the identified and the other vulnerabilities. Now, soon after this letter came in the public domain, there was a press statement which was issued by EPFO, where EPFO says that such warnings are a part of the regular administrative process and there has been no data leak as what is being referred in this particular letter. They also say that the Employees Provident Fund Organization remains vigilant that no such data leak happens going forward as well.
All right, Yash, we'll leave it at that. Thank you very much for joining in. Now, the big development from the Deal Street, and this one is a CNBC TV 18 exclusive. It's no secret that both Walmart and Amazon, the retail behemoths from America, want a larger pie of the Indian e-commerce sector. But now we learn that they're both in the fray for acquiring stake in Flipkart, India's largest online retailer. CNBC TV 18 learns that Amazon has made a formal offer to buy 60% stake in Flipkart. This comes amidst reports that Walmart is also likely to reach a deal to buy a majority stake in Flipkart very soon. Kritika Saxena, who broke that story for us, joins in now. Kritika, take us through the latest. I mean, we already had Walmart and now Amazon is in the fray.
Well, Walmart is in the final stages of negotiation to look at acquiring Flipkart. We already know that Amazon has been in the fray, but what we understand now is that a formal offer has now finally been made. So far, Flipkart investors were holding out to see what Amazon has to offer. So this is what we have in terms of the details. They have offered to buy out at least 60% stake in the company versus Walmart's offer, which we understand is above 80%. Now, Walmart had offered to retain the current structure of Flipkart. In this particular case, we understand that Amazon has offered to merge the entity entirely, merge Flipkart entirely into the India arm if the deal does go through. They have also asked for a non-compete requirement of about 1 to 2 years by the founders, which is not there in the Walmart offer. As far as the financial parameters are concerned, we understand that the financial details are pretty much on par, but Amazon has offered a breakup fee, and this had been reported earlier as well, of about $2 billion, which essentially entails that if the deal doesn't go through between the two players or for some reason the deal is terminated, there is a breakup fee requirement. Now, where do things stand as far as Walmart is concerned? We understand that investors, including Tiger, Axel as well as NASP, prefer Walmart's offer at this point in time, and SoftBank is the only player which hasn't kind of made a decision. SoftBank does want to partially exit over here. We learned that Sachin Bansal was in US next week. Even the founders, for instance, are favoring Walmart at this point. Walmart global executives are likely to come in very soon. The conversations last week between the founders and Walmart were positive, and the negotiations are in the last lap. So it remains to be seen if Amazon does emerge the front runner, but yes, by the looks of it, Walmart still continues to be the very clear front runner here.
All right, so it's two people in the fray for Flipkart now. It's going to be a tough battle. Kritika, thank you very much for breaking that story for us. But the other important story today, that is the cabinet today approved subsidies to sugarcane farmers for the produce that they sell to sugar mills. This move is aimed at helping an industry that is struggling with oversupply at the moment. The government has decided to give 55 rupees for every ton of cane that is sold to mills by sugarcane growers, which means that mills will now pay farmers state set prices minus the 55 rupees subsidy. Remember, the centre fixes the prices that mills must pay to cane growers every year, barring Uttar Pradesh, which is an exception, which usually raises the rates to relieve its farmers. Now, CNBC TV 18's Rituparna Bhuya caught up with the Food and Public Distribution Secretary Ravi Kant. He said that due to the high levels of production and low sugarcane prices in the market, the liquidity in the mills is not in a good state, which is why the cabinet is subsidizing sugar sold to the mills.
The mechanism is that whatever subsidy is entitled for a particular mill is based on the cane process.
Right.
It will go to against the quota of the mill, but it will be passed on to the farmers against their dues. This is the peak season for the dues because this is the time the areas build up the maximum.
Right.
And this time, because the prices have been, last years the government has taken a lot of efforts to clear all the dues of the previous years.
Right.
But this time, because of the unusual high levels of production and low prices in the market, the liquidity position of the mills is bad.
Right.
That is why government is trying to, give some support to the mills.
Right.
All right, we'll take that story forward. Now, sugar stocks rallied in early trade but soon gave up all the gains as the industry calculated that a subsidy of 55 rupees per ton is just 1,400 crore rupees. Sugar mills owe 20,000 crore rupees to farmers as arrears. In fact, CNBC TV 18's Archana Shukla spoke to a Sugarcane Farmers Association leader in Belgaum, and he says that a subsidy of 55 rupees will hardly make any difference in bringing down those whopping arrears. Listen in.
Paying 2,900 rupees is the obligation of the sugar factories. But we are getting only 2,500 rupees. The government pays subsidy of 55 rupees. What happens? There is gap between the prevailing market price of the sugar and the FRP. There is gap of 400 to 500 rupees. If the government pays 400 to 500 rupees subsidy, then it works out.
It's raining exclusives here. Here's another one from the FMCG space. Soon Jawans and their families could use e-wallets to make payments at defense canteens. We learned from sources that Canteen Stores Department, which makes up to 5 to 7% of industry's FMCG sales, is in talks with marquee payment gateway firms to accept payment through their platforms. Priya Sheth joins us now with more details. Priya, life's getting easier for the Jawans if they want to buy things from the department stores.
Well, absolutely. In fact, with the Canteen Stores Department looking more at automation as well as digitization in their procurement as well as other supply chain procedures, we understand that they're going to introduce a convenient payment option as well for the Jawans and their families. In fact, what we do understand from our sources is that Paytm, Airtel Money as well as MobiKwik has approached the canteen stores department to enable payments through their platforms for the Army Defence Forces. In fact, we do understand that at this point in time, payment is accepted through 3 modes. One is through cash, credit as well as debit cards, and through the Beam UPI. Of course, what we do understand is that wallet companies have offered, zero commissions at the outset, but they may also look at introducing a transaction charge at a later point. Now, of course, the canteen stores department needs an approval from the Defence Ministry before going ahead with any such decision. But of course, it will be lucrative for payment companies, because do remember that the canteen stores department had a turnover of about 18,000 crore rupees in FY18. So it's a space that we will continue to watch. In fact, we did reach out to all the companies. The CSD said that it is an evolving scenario and it will wait for government policy surrounding the acceptance of private portals. Paytm, MobiKwik as well as Airtel Money did not respond to our query.
All right, Priya, then defense canteens will explore the use of e-wallets. We'll leave it at that. Thank you very much for joining in. Now, in a fresh twist to the Binani Cement insolvency case, the Kolkata bench of NCLT, or the National Company Law Tribunal, today ordered the Committee of Creditors to consider Ultratech's revised offer for Binani Cement. Now, the court has directed the resolution professional to accept the revised offer from Ultratech, which we understand is close to 8,000 crore rupees, and place it before the Committee of Creditors within the next 3 days. It also allowed Dalmia Bharat to raise its offer to match Ultratech's if it so wished. The deadline for the resolution of Binani Cement under the Insolvency and Bankruptcy Code has also been extended and is now valid up until the 24th of June. To the latest now in the race for SR Steel, sources tell us that the company's Committee of Creditors will meet with the bidders from the first round, that is ArcelorMittal and New Metal, today. The focus of the discussion, we understand, will be the eligibility of the respective resolution plans for both the bids that have been submitted by these two players. Now, while ArcelorMittal, we understand, has been asked to clear dues from KSS Petron and Uttam Galva Steels to remain eligible, the New Metal Consortium, which has Revant Roya, they will have to clear all the SR dues to become eligible under Section 29A, and that's a tall ask. So ArcelorMittal's bid also, as we reported earlier, at 35,000 crore rupees is far higher than what New Metal had offered at 19,000 crore rupees. But do remember, New Metal has offered to match ArcelorMittal's offer if the lenders reject Arcelor's bid and declare New Metal the front runner. Now, tech giant Apple has posted its best ever second quarterly earnings, with its quarterly revenues hitting $61.1 billion mark. iPhone sales, though, was slightly below expectations. The tech giant also announced a $100 billion share buyback and raised dividend by 16%. CNBC's Arjun Karpal has done some number crunching on these numbers and joins us now to take us through the highlights. Arjun.
So first, I want to start back with that massive $100 billion share buyback. And of course, there's no timeline for this yet, but this is something that excited investors a lot. Apple bought back around $22.8 billion worth of shares in this quarter just gone, and that was the largest ever quarterly buyback they've ever done. So you're seeing they're continuing to give that money back to shareholders, which is keeping them very happy. I want to move on here now to iPhone sales, 52.2 million units sold. Now, that only equated to a rise of about 3% in terms of unit volume, but a 14% rise in revenues, which suggests that actually those consumers were buying some of the more higher priced iPhones, which was, of course, one of the fears that perhaps the iPhone 10 wasn't selling as well as it had been. Tim Cook said that customers chose the iPhone 10 more than any other iPhone each week in the March quarter, so not as gloomy as many had feared. And now, finally, of course, one of the key points here was services, is something that I flagged up yesterday, and that revenue for the quarter was up 31%. And that's quite important because as that smartphone market matures, Apple's continuing to monetize its massive user base with its products such as Apple Pay and Apple Music. Now, let's move over a little bit towards some of the stock move here after hours and what has happened with Apple over the last 3 months. You see, it's roughly flat, but there was a big pop after hours there. And a lot of that was, of course, of what I said around the iPhone, the services, the buyback. But, of course, China was another key factor that was very successful. Apple revenue there was up 21% after several quarters of pain in that market. Another big plus for the stock there was the products, apart from the iPhone, that were doing well. The Apple Watch, for example, that other product category was up 38% as well. And guidance, of course, remains strong, which gives the market a sense that actually Apple expects iPhones to continue to sell well in this current quarter. So went into the earnings report with dark clouds hanging over, but Tim Cook & Co managed to allay many of those fears.
Right, that's Arjun with Apple's second quarter numbers. Now, meanwhile, Apple has set a new first half record in India. Speaking during the second quarter earnings con call, CEO Tim Cook said that he doesn't buy the view that Indian market is saturated. He said that Apple is putting a lot of energy and working with carriers in this market. He said, and I quote, "India is the third largest smartphone market in the world. There's obviously huge opportunities there for us, and we have extremely low share in the market overall. And so we're putting a lot of energy there and working with the carriers in that market, and they're investing enormously on the LTE networks," end quote. Now, more from the earnings space, and this one from Indigo's parent company Interglobe Aviation, that has posted its fourth quarter earnings. Profits are down 73% compared to last year. This even as revenues rose nearly 20%. Sonia Shenoy is here with the number crunching. Sonia, how do the numbers look?
Well, the numbers look very disappointing, Ritu. In fact, if you look at them across all parameters, the numbers are much below what the street was expecting. The profits have fallen significantly to 117 odd crores. The EBITDA, which is the operational performance, has also fallen. Now, the management has indicated that there are a couple of reasons for this. One, of course, is the fuel price increase, which has impacted the entire sector. So the fuel costs for Indigo have gone up by 33% this time, coming in 2,337 odd crores. There's also a big decline that we've seen in the yield for Indigo. The yields have fallen 5.6% year on year, coming in at 3.31 rupees per kilometer. Now, not just that, they have written that the other costs have gone up significantly. So if you look at the other costs for the company, they have risen by almost about 30 odd percent. That's excluding fuel. Now, what does this other cost include? Remember, there was the grounding of planes issue that Indigo had in the quarter gone by. And on account of that, they had to go in for a very expensive short-term lease of aircraft. And the compensation that came in from Pratt & Whitney was much less than the cost that they had to incur on account of the short-term lease. So that is the other cost that is factored in this time. So it's been, a mix of factors which have impacted their earnings. One, of course, is higher fuel costs. There has been pressure as far as yields are concerned, forex impact. But the biggest thing is the other costs have gone up for them almost 30% on account of the issues that I just mentioned. So I expect the stock to open in the red tomorrow.
All right, Sonia, you said you expect the stock to open in the red tomorrow. Anything else from the numbers that could pull up a surprise? We also had, the CEO recently resigning. So it's been a ton of bad news for the company.
Yes, in fact, we are awaiting the conference call and more details on what happens with the succession plan. But if you look at some of the other operational metrics, they are not bad. The load factors for the company have come in at almost 89% versus 86% last time. The average revenue per kilometer has gone up. The RPKs have gone up by almost 24%. So the internals, because the industry has done well, the internals are looking fine. It's just that the company has had to undergo the grounding of plane issue, because of which they have, the other costs have been hit in this quarter particularly. So we need to know more from the management as to, one, of course, what the succession plan is, and two, what the compensation has been from Pratt & Whitney with respect to the engine issue.
All right, so the engine issue and the succession plan, that is the word we're awaiting from the management later in a con call. Sonia, thank you so much for joining in with Indigo's numbers. A disappointing set at that. But with that, it's a wrap on this edition of After the Bell. Stay tuned to CNBC TV 18. Markets Today Talk Back.